Vermont does not show up on the radar of a lot of venture capital practitioners. And as such, not only do our entrepreneurs lack access to capital, but they lack access to mentorship who can provide lessons learned, best practices, and also to connectivity to ecosystems outside our own.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside. Woo! Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. Visiting Every U.S. State himself, Eric Hornung.
Jay, I am getting dangerously close to failing at my mission, my goal of hitting all 50 states before I turn 30. I'm 13 short, and, we can go through and list them if we want. We don't have to, but I've been supplementing my travel with international travel lately as opposed to American travel. And on the eve of my 29th birthday, that's not great.
Are you turning 29 tomorrow?
No, it's like, a metaphor, I think.
Okay. Figure of speech. I'll call your bluff. Yeah, let's try to name all 13 of these states that you haven't gone to.
Man, I thought you were going to go down this road. Let's see. North Dakota, South Dakota, Kansas, Oklahoma, Arkansas, Delaware, which is, I think, the only one, besides Louisiana, that's east of the Mississippi. Mississippi, I really should have went in some sort of order here. Alaska, Wyoming, Montana, Idaho, and Iowa.
All right, that's 13. I have no way of checking to know if those are actually 13, or if you also know that I don't know the states you went to, so you just named 13 states. What about U.S. territories? Does that count?
I don't count them. There's a lot of them, first of all. And, I think the closest one to becoming a state is Puerto Rico, and I've been there. So if for some reason Puerto Rico becomes a state before I turn 30, look, I already checked that box.
And if you're going to visit one of these states, what counts as a visit? Can you drive through? Can you pass through?
Nope, super simple. One overnight stay. Not a lot of gray area there. Yeah, I'm sure you could come up with some sort of scenario where, I get in at 11:59 p.m. and sleep in a tent or something and then pack up and move out, but that hasn't happened yet. I don't foresee that happening with the states that I have left because they are so big. Also, I have this goal, so I'd like to get somewhere and experience the state for at least 24 or so hours.
At one point, you shared with me a spreadsheet that was a literal log of the number of days you spent in different cities this year, and you've spent more days in a couple of international cities than you have in Columbus, Ohio. So why not just make like a little road trip out of it and knock out 5 of those? What's the word when the states are all close together?
Contiguous?
Contiguous. Why not knock out like 5 contiguous states next month?
Well, I got vacation time that you got to figure in. I got a full-time job over here, Jay. We don't all live the self-employed lifestyle. But I think that my goal for the Wyoming, Montana, and Idaho would be to knock out those 3 at once. The rest aren't really that contiguous. Like Alaska can't be contiguous to anything. Delaware is its own little cluster surrounded by states I've been to. Iowa is the same way, and Oklahoma, same way. So I also have kind of a little thing where I don't like to just go to the state. I want to go there for something. So we went to Nebraska to see the Berkshire Conference, and that was my way to get to Nebraska. Every other place I've gone for a reason, whether it's specific skiing or snowboarding or mountain biking or some sort of conference or some sort of event or fall foliage in the Northeast or Crater Lake in Oregon or whatever it is, there's an event happening there. And a lot of these states are a little harder to have a marquee moment in.
Were there any states you were expected to be underwhelmed by that you were surprised by?
I think the entire Northeast I was expecting to be a little underwhelmed by. I know that people like Bar Harbor, but outside of that, in Maine, you don't really hear much about. You hear it's beautiful, but there's nothing there. I thought it was really beautiful being able to drive all the way up. We drove from Portland, Maine, which is a really cool city, little hipster vibe, great seafood, all the way up to Canada and we were the first people to see the sunrise in the United States because we're the easternmost point in the United States is called Quoddy Head, or I don't really know how to say it, but it's a lighthouse, and it is just like a beautiful sunrise, and we were the first people to see it on whatever day that was. But Maine was really cool, driving down to New Hampshire in the White Mountains, and then we ended in Burlington.
Well, speaking of ending in Burlington, let's end this intro on that note and dive into today's guest, who is Robert Zulkoski, the chairman and managing partner of Vermont Works. Vermont Works is an independent alternative investment firm supporting Vermont's job and economic development, which is based in Burlington, Vermont.
You know, it's not based in Burlington, Vermont, but it's very close. Ben & Jerry's. And man, it was really cool getting to go to their plant and just eating Ben & Jerry's like fresh from the line. Do you like ice cream? Are you an ice cream guy?
Love ice cream. It's actually one of the reasons why I am probably 8 to 10 pounds heavier than I'd like to be right now. I love a good 10 o'clock ice cream before going to bed.
That's good. Here's the thing. You said like a couple weeks ago that you were 15 pounds heavier. So have you been losing weight? Or have your goals just changed?
I would love for that to be the case. And I let's say yes. Yes, indeed. We got introduced to Bob through a cold email about Vermont Works, and we said, yeah, that's definitely within the realm of who we like to talk to on this show. Let's bring him on. And so here he is, an interview with Bob Zulkoski of Vermont Works. Bob, welcome to the show.
Gentlemen, good afternoon.
Bob, on Upside, we like to start with the background of the guest. Can you tell us about the history of Bob?
Well, I'm going to limit it to my professional career because prior to that, it was quite salacious, and we'll keep that off the air. But I, not too long ago, finished a 35-year career in private equity, starting in the early 1980s during the Gordon Gekko years on Wall Street. Throughout that career, was heavily involved in creating new investment products and entering new markets. Have built several private equity platforms around the world, spent 30 plus years living outside of the United States. And since retiring, I've moved back to the beautiful state of Vermont, where I spend half of my time trying to do good things for others and the other half of the time trying to have fun.
You mentioned 30 years outside of the United States. Where was that?
Principally in Asia, 20 years living in Singapore. And I currently have, in addition to business interests in Asia, also involved in a platform in the UK and one in South Africa as well.
Besides the rebranding from leveraged buyouts to private equity, what changed the most in your 35 years in the space?
You know, I would say that the probably the biggest shift has happened in the last 10 to 15 years, where I've gone from the sharp end of private equity and venture capital to ever increasing dedication to the expanding world of social impact investing. During that transition, went from all those things that define private equity in terms of competitiveness and aggressiveness, and to moving to social impact, where one of the great noble parts of it is the level of collaboration amongst the various constituents.
How do you define impact investing or social impact investing?
The simple answer is people like to say, well, it's the ability to do well while doing good, making investments where there is an equal balance between generating appropriate risk-adjusted financial returns along with some element of social wellness, be it doing something good for people or doing something good for the planet. You often hear it referred to as double bottom line investing.
On the theme of the first bottom line, I feel like the data is kind of out on this. Is there alpha to be generated by focusing on social impact investing, or are you just kind of mirroring market returns while also having this do good benefit?
You know, in the public markets, ESG investing, environmental, social, and governance investing, I think there's enough data out there and enough analysis of that data that has shown that there is some alpha available for ESG investing. And I think a principal driver behind that is increasingly consumers around the world are making consumer choices based on some of their social values. And I think big companies like Unilever has recognized that and, has tried to push ESG values throughout their organizations. In the private market, social impact investing, even though it's a rapidly growing and a fairly sizable market right now, I think the data is still a bit murky. And I think what makes the data murky goes to the basis of your question of what is social impact investing. There seems to be a pretty wide continuum of definitions of social impact investing. There'll be investors on one end of that continuum who put a greater emphasis on the social good and would be just happy to get their money back, maybe with a small return. You often hear that called slow money or venture philanthropy. And at the other end of the spectrum are investors who say that we don't really want to give up any financial return in exchange for doing good, but we still want to do good. And so often you hear a debate within, this investment sector as to what's the definition of social impact and also how does one measure social impact.
What was the activating event for you to go from this aggressive, hard-charging private equity stance into impact investing?
It remains one of the most clear moments in my life, certainly one of the most transformative. My family and I were living in Singapore, and I was running a Pan-Asian investment business reaching from China and Japan down to Australia out to India. So I was spending a fair amount of time in the air chasing deals. And when I came back to Singapore, one of my local friends who was also in the industry invited me to join a little private investment club made up of 4 other private equity individuals who were pooling, some of their money to invest in this area called social impact. And I had never heard of the concept before, or at least in terms of an investment sector. And this little club would meet and they would hear proposals from third parties seeking either small amounts of investment or grants to support, social entrepreneurship. And we, in addition to making investments and grants, we would also assign 1 or 2 of the partners to work with those groups to help affect their plan. And the first transaction I worked on was working with a group of 5 parents of young autistic adults who, on their own dime, had engaged a medical study to determine what kind of jobs that these young adults could do based on where they were on the spectrum. And make a long story short, we helped them set up a mushroom farm. And I was the partner responsible for this. I helped them apply for grant applications to the Singapore government, helped them find a mushroom farmer mentor, and helped negotiate a lease and get that business up and running. And to see the happiness on behalf of these young adults who were working there and their parents marked an inflection point in my life. And it opened my eyes that these possibilities existed.
So that was when you were in Singapore, that experience kind of kicked off. What brought you to Vermont in retirement?
So I like to tell people I became a Vermonter in 1980 when I came up here with my then college roommate chasing his girlfriend. When my family and I moved overseas, we wanted to keep a home in the U.S. so our children would have 1 foot in each world. And for lots of reasons, we decided to buy a home here in Vermont. And for the many years we were overseas, my family would come back, spend the entire summer, and we would also come back for Christmas and New Year's. And it was my wife's desire that when we retired, we would retire back here. So when our last child was off to university, it was time to move back. And we had a confluence of events, including becoming empty nesters. And my wife did an amazing job of repopulating her life with volunteer work and philanthropy, and really sort of set the stage for me to emulate her and trying to figure out how to give back to this state that drew us in, and we came to love.
Where are you from originally?
Born and raised in New Haven, Connecticut.
What type of experience and exposure did you have to Vermont before that 1980 trip with your roommate?
Because Connecticut and Vermont are so close geographically, came up here quite often when I was young to go skiing. But as it usually is when you're that young, you really weren't paying much attention to the drive or the scenery or any of the awesomeness that makes Vermont a unique location.
I've never been to Vermont. Why should I have been to Vermont by now?
Certainly, given your interests in emerging innovation ecosystems and entrepreneurism, Vermont should be on your map. In a number of areas, we punch above our weight. We're amongst the top 3 per capita in terms of number of unicorns, which is not saying much given that we have very few people, but companies like Ben & Jerry's, Keurig Green Mountain, Dealer.com, Seventh Generation. The other is we are also known as an epicenter for social entrepreneurship. Again, with companies like Ben & Jerry's and Seventh Generation, we've got the number 1, according to Princeton Review, number 1 green MBA program in the country, number 5 worldwide. And we are, constantly on the top of the list of places with amazing craft beers, craft spirits, farm to table. For many years, and I think still, we have the number 1 rated beer in the country. So if you like beer and you like outdoors any season, it's a good place to be. And you like to hang with people who are entrepreneurial and innovative, also a great place.
So your wife populates her life with charitable and philanthropic activities, and that inspires you. What's iteration 1 of you getting involved in the state from that perspective?
Yeah, no, I mean, I jumped right into the deep end of the pool without floaties, didn't really have a warm up. As I mentioned, I'm involved with a number of social impact investment platforms around the world, including the Conduit in London and Talana Asset Management in South Africa. And I had just returned from a trip to South Africa in February of 2016, and I was comfortably seated next to my neighbor's fire pit with a solo cup of bourbon, enjoying a beautiful evening. But I was whinging about how my back hurt from the long flight. And so my neighbor, now one of my partners in Vermont Works, asked me, well, geez, what are you doing? And I mistook the nature of the question, and I went on my riff about social impact investing, and he said, no, I get all that, but why are you doing it so far away? Why not do something here in Vermont? And after a little bit of a pause, I responded, I said, hey, Vermont Works, and that was where Vermont Works was born. Now, the name Vermont Works means many other things, but at that moment, it was like, hey, why not Vermont? And my founding partner, Frank, who is my next door neighbor, he too spent his career in fiduciary investment management. And we talked about, well, what could we do here in the state that taps into our unique skill sets, our networks, and our interests? He and I then embarked on a 6-month road trip through Vermont, meeting legislators, academia, business people, entrepreneurs, trying to understand the relationship between capital and job formation in our state. Because early on, we had decided that while there are many social challenges in a rural state like Vermont, what we felt was the beginning point, or the motherhood issue that the state struggles with, really is a job issue associated with a poor demographic curve. Vermont is ranked number 2 in the country in terms of how quickly our population is shrinking and aging. We're losing our young people because we haven't been able to either provide them jobs within the state, or, to what we're trying to address, create an ecosystem that reliably supports innovation and entrepreneurship.
So I think this is a good time to kind of ask, what is Vermont Works now?
Vermont Works is a movement. We started out with the vision or a belief that what was missing from our ecosystem was the access to empathetic capital, especially growth stage equity capital. But as we've moved forward, we, like a lot of practitioners of place-based investing, have come to realize that not surprisingly, capital by itself is not the only answer. Vermont, for the same reason you were suggesting you've not been here before, Vermont does not show up on the radar of a lot of venture capital practitioners. And as such, not only do our entrepreneurs lack access to capital, but they lack access to mentorship who can provide lessons learned, best practices, and also to connectivity to ecosystems outside our own. And so over the last year and a half, we've expanded our strategy to go beyond just providing capital, but also to create epicenters of professional structured mentorship. Everywhere else in other geographies that we want to emulate, you hear about incubation, acceleration, maker spaces, etc. We say we have all those, but our incubator, or a group who claims to be an incubator, is really just a co-working space. Our acceleration is ad hoc in whatever location it could be formed at that time. In makerspace, we do have a solid base of makerspace, but incubation and acceleration was missing in spades. And so we've taken it upon ourselves to build a purpose-built location for incubation and acceleration to take place. And that's called the Vermont Innovation Commons. In addition to that, we have become an active player in trying to reimagine a number of other facilities around the state in a creation of a hub and spoke network for mentorship. One of the negative trends that you see going on across the United States right now is the closing or struggling of a lot of small liberal arts colleges, especially here in the Northeast. Just this year alone, we've had 3 small liberal arts colleges here in Vermont announce that they were closing after, in one case, well over 100 years of operation. And so we're working with the state, the federal government, local key stakeholders, and partners around the world to reimagine the use of some of those campuses, all in the context of creating structured mentorship around social entrepreneurship. And then the final thing that we're doing, and this is prevalent both on the mentorship side and how we've gone about raising our capital, we want to be able to connect our companies to capital sources outside of Vermont as well. As such, 85 to 90% of the $50 million fund that we're raising will be raised from outside of the state of Vermont.
How did you decide on a fund size of $50 million?
It's a confluence of factors. Certainly it has to start with the belief that during the investment period of the fund that we'd have ample investable opportunity to invest that capital. The second thing is, the second and third thing are really based on the many years of experience I have in raising private equity funds the types of investors that we're trying to appeal to have certain governance requirements. Often you'll hear them, you'll hear things like minimum and maximum. Some of the institutional investors will only make a minimum of investment of $5 million, but there can only be a maximum of 10% of the fund. So using those metrics, we back into $50 million. The third part of it really has to do with building a world-class investment management team. $50 million sounds like a lot of money as it relates to a dedicated Vermont fund, but in the world of private equity fund management, it's quite a small fund. We have to build the team that is going to identify, underwrite, and manage the investments for the small fee that fund will generate. So the fund had to be a certain size to make the platform viable.
One thing we hear from founders outside of the capital epicenters is that it's really hard to find a lead. Is this fund going to be leading rounds or kind of follow-on capital?
Yeah, that's a great question, and actually there's two dimensions to answer that: the lead into the portfolio companies, and also the lead investor into the fund. Let me start with that first. As I mentioned, we're raising $50 million. 85 to 90% of that is coming from outside of the state. So, as I said earlier, Vermont is not on the radar of a lot of institutional investors, even though my partners and I have long histories as fiduciary managers for institutional capital. That only opens the door. We have to convince people, why Vermont, if you will. And so to do that, by structuring ourselves as a social impact fund, we're able to approach an investor audience that's more apt to be interested in things like rural economic development, or identifying markets where there are alpha because it's not too much money chasing too few deals. The whole rise of the rest concept. It still doesn't. The fact that you can change audiences or pick an audience doesn't change the fact that you really need to knock over that first domino. And so we've been able to do two things. One, last year, we submitted an application to the U.S. Department of Agriculture, USDA, to be an approved manager under their Rural Business Investment Program, RBIP, which would allow us to become an RBIC, a Rural Business Investment Corp. There's a number of significant benefits of that designation. In addition to the institutional validation, it also is one of the few exemptions under Dodd-Frank legislation that prohibits community banks or commercial banks from investing in alternative assets. And as you know, many of the banks in rural markets have pots of community investment dollars. This designation unlocks those. The other approach that we've taken in terms of an anchor investor is we have focused on identifying the most progressive foundations across the United States who have investment strategies in support of entrepreneurship. And we focused our efforts on evangelizing our story to those groups as being the most empathetic potential first investors. In terms of the anchor investor in companies, that's one of the roles that we want to play. My partners and I believe that we have the investment pedigree to give most institutional and venture capital investors comfort in terms of our investment processes, diligence, and value add. And so by acting as an anchor investor in some of these local companies, it gives the out-of-state investors some comforts. For example, one of our portfolio companies, Packetized Energy, which is a company that's been incubated within the University of Vermont and focuses on distributed energy resource management. We were the lead investor in their angel and their seed round, and we're leading their A round investment as well. And we recently brought them to London and put them in front of 100 different investors in the UK, looking at their product and their opportunity. So it was because of our anchor investors that we were or us being the anchor investor, that we were allowed to be able to showcase that company. We did the same thing recently with another company we invested in called Seed Sheets. So part of our purpose is really to be the early commitment to, whether it's an early round or a growth stage round, but to be the early validation of a company's possibilities.
One follow-up question on this RBIC credential or designation. I haven't heard about this idea before. It sounds fascinating. I'm curious because you referenced Dodd-Frank, and this is a rural type designation. Does anything change with the 2019 Farm Bill? Anything for the better or worse with RBIC?
Yeah, it's gotten better. So under the prior Farm Bill, if you so as an RBIC, amongst the commercial banks that can now invest in you are the farm credit associations around the United States. And there's actually a requirement for RBIC that a minimum of 10% of your equity come from one or more farm credit associations, farm credit institutes. And there's no cap on how much of your capital you could raise from the farm credit institutions. But if you go over 25%, your fund has to be a dedicated agriculture fund. We had, because our investment mandate is broader than just agriculture, albeit we are focusing on ag and ag tech because Vermont does have, an active ag tech community. We were going to keep the Farm Credit Institute capital to 24.9%. In the 2019 or the latest Farm Bill, that cap has been moved to 50%. So we could take up to 50% of our capital from farm credit institutions without triggering the necessity to be a dedicated agriculture fund.
I'm going to go a little bit of a different direction here. You mentioned that a theme or a core part of your strategy is to connect entrepreneurs in Vermont to funding outside of Vermont. So if I'm an investor that you're speaking to, let's even just say from the Valley, and you convince me to get off the plane in Vermont, from the time I get off the plane to the time that I leave in a day or two, where do I need to be stopping to get the best view and experience of Vermont as a destination for my capital?
Yeah, love that question. So we started this conversation talking about Burlington. Burlington is the largest city in the state. It's within the largest county of the state, Chittenden County. I forgot the exact statistic, but probably 60% of the state's GDP originates within Chittenden County. All that being said, we're not Burlington Works or Chittenden County Works, we're Vermont Works. Our focus is across the state. And one of the ways that we have built the infrastructure to be able to access entrepreneurship and interesting opportunities across the state and support it is through a strategic relationship that we've created with an entity called VSECU, which stands for the Vermont State Employees Credit Union. And I never thought I'd say this in my career, but the most progressive financial institution around is this credit union. They are very mission aligned with us, and they have 9 offices around the state that we're able to access all the opportunity. That being said, that doesn't answer your question. Your question is like, if you're going to go somewhere, where are you going to go? And today you'd fly into Burlington and you'd stay in and around the Burlington area, maybe go down to Middlebury, which is in Addison County. Part of what we're trying to do at Vermont Works is to, in a rural market like Vermont, whatever ecosystem that we have is fragmented. And so the various efforts in support of innovation and entrepreneurship tend to be fragmented. We are trying to act as a fulcrum to bring that ecosystem back together for greater efficiencies, both of delivering that mentorship that's so important, but also delivering access to capital. And hence the approach that we've taken to develop the Vermont Innovation Commons. When we're completed with the building in 3 years, it will be the first of its type in the United States. It will be the first purpose-built co-working, co-living, education, and digital entertainment facility in the United States. And by providing that co-living element, we're able to bring entrepreneurs from the other 3 corners of the state into the facility and keep them housed during incubation or acceleration or an MBA boot camp or a coding academy or any of these mentorship programs. And one of the things that we've learned over the decades is that mentorship and the collision of ideas continues past any kind of structured day. And so if we have, entrepreneurs coming in from Brattleboro, which is on the southeast corner of the state, coming up to Burlington, and they're spending a month on site, they're still building knowledge and connections as they're rolling out pizza dough at the end of the day with the rest of the people in the co-living facility. So we purposely approached the programming of the Vermont Innovation Commons to address your question, because one of the personal challenges I gave to the head of our programming and events team is that within the first year of opening the Commons, we want to have the Rise of the Rest bus trip visit here, and they're going to want to have one place where they can see and touch everything.
Are there any vocal community leaders who may be startup founders or people who are just dedicating time pulling meetups together in Vermont or Burlington?
Yeah, no, and I had mentioned there's a lot of great efforts going on across the state, but they tend to be fragmented. And so what we've tried to do is, by supporting them financially and by supporting them with a dedicated place to hold those events, we're seeing the number, the quality, and the size of those events really kick up. There's a great program called Excel VT, which is a joint venture between the Sustainable Jobs Fund and the Flexible Capital Fund here in Vermont, that are doing bespoke acceleration around specific themes. One of the events that I mentioned earlier that we started 2 years ago, the Vermont Investor Summit, is a big event that we now get about 500 people a year to, where people come in, they meet the legislators who are talking about why Vermont. They're talking to successful entrepreneurs who are talking about why Vermont now. And we tend to have some great out-of-state speakers talking about things that are relevant to our ecosystem. And then we cap it off with a combination speed dating of some local companies and an expo of local companies. So you could actually see things going on all in one evening, all with a cocktail in your hand, looking over the sunset on the lake.
I'm curious what Vermont Works considers more of a win. Obviously, you want growth of jobs. That's how you kind of started this idea. But let's say in a hypothetical scenario, you had a company that was successful, created 100 jobs, had the same valuation in the same time frame. Would you rather see that be someone who lives in Vermont, whether it's that Southeast city who creates that job, someone who is from Vermont and boomerangs back, or someone who's not related to Vermont at all? Maybe they work in Silicon Valley and they're looking for a new place to start a company. If you could only pick one of the three.
I wouldn't pick one of the three. All of those are equally important, because what our mission is to retain and attract youth and innovation to the state of Vermont, with the desire to bend our demographic curve in a more promising direction. So if we can keep young Vermonters here, that's great, albeit through my own mentorship of some of the higher ed students here. I urge them to go away and learn and experience and bring those experiences back. Some of the companies that we have invested in, Vermont Farm Table, Stonecutter Spirits are companies that were founded by individuals from out of state who came here with the desire to start a business here and to scale that up. And so we've supported those. And many of the programs that we're involved in is trying to work with the people in higher ed, the students of higher education here who chose to come to Vermont to go to school. And from our experience, many would like to stay. I sit on the board of directors of the University of Vermont Sustainable Innovation MBA program. And it's an amazing program, but it's even more amazing if we can provide the graduates of those programs an opportunity either to find a position here in a company in Vermont or to start a viable company here in Vermont that will employ other people as well.
Startup founders and startup employees are a small percentage of the population. Why aren't there more young people in Vermont?
Yeah, I think, quite frankly, we're late to the game, and as far as being a community that recognized the changing demographics and what young people were interested in and focusing on. At a time where millennials have thankfully dialed lifestyle back into their decisions. We're one of the most incredible states to live in. We're constantly jockeying back and forth with places like Colorado as, the healthiest states in the United States. So we also have other foundation elements that places like a Boulder or Chattanooga or Portland have, and the fact that we have gigaspeed fiber optic connectivity. We have ranked institutions of higher education. I mentioned UVM's SEMBA program, #1 in the world. We have 2 colleges that are not nationally ranked in cybersecurity, 1 in gaming. We have the #1 environmental law school in the country. And we have an amazing doorstep Ivy League school in Middlebury College. On a per capita basis, we're amongst the highest in terms of a number of students in higher education. Again, it's a little bit of a false number because we have so few people in the state, but we have all these raw materials that allow us to emulate, again, those places like a Boulder or a Chattanooga. What we're trying to do at Vermont Works is provide the missing pieces, which is capital, mentorship, and connectivity.
In January, or I guess I should say in late December, it was announced that Vermont had this $10,000 remote worker grant to move to Vermont. One of the stipulations that I thought I read was you must be a full-time employee of a company headquartered outside of Vermont. Does that work for somebody like me who is self-employed?
It does. It's specifically been tweaked and designed to be able to attract remote workers. As I said, with gigaspeed fiber optic connectivity and lifestyle, we all like to think Vermont is a good destination for remote working. So yes, it does. I will go on the record, because I have in some of my columns, published articles, I'm not a big fan of that program. It has been tremendously successful. When it was first announced, there was over 4 million hits on the state's website promoting the program. My issues with that program is not its intent, it's its approach. And, specifically, I would like to see the state spend its limited resources on people development rather than people acquisition.
You mentioned earlier having the Rise of the Rest bus come by would be a tangible metric of success for Vermont Works. What other tangible metrics of success do you guys have, are you looking for over the next however many years you're planning?
as a social impact fund, our investors expect us to report at least once a year our impact measurements. And we have actually codified what our impact measurements are. We publish them in our online data room. All our investors, when doing due diligence, look at those and understand the baselines to which they're measured against. That it's a comprehensive list of measurements, but they're all job related: number of jobs, location of jobs, salaries of jobs, with benefits, without benefits, gender equality, things along those lines. So those are the minimum, if you will, of how we're going to measure our success above and beyond what the financial return that we still expect. But as I said before, our mission is to retain and attract youth and innovation and to bend the demographic curve. And those are some things that obviously, if we're doing our job, it's going to start to manifest itself. The other thing that we're trying to do is we're trying to lead by example. Rural markets, Vermont included, have become too used to punching downwards rather than upwards. Too often I heard early in the journey, well, we don't do that, or we can't do that, or we don't have the money for doing that. We're trying to show by taking this mission on that hard things can be done here. Unique things could be done here. And actually, I'll take that back. I don't even have to say unique things. Part of my evangelizing our story locally is, listen, we're not the smartest bulbs and the brightest bulbs in the lamp. We're not creating all this. What we're really doing is emulating successful strategies that have been employed elsewhere around the globe. We didn't invent incubation. We didn't invent acceleration. We're not building the first innovation hub. We're doing all of that here, and we're doing it by doing the research to look at what has worked elsewhere and how best to deploy it here in our market. So I would measure the intangibles is whether we also create an uplift that ups the game for all the other participants in this ecosystem. And when I start reading articles or participate in nationwide podcasts about Vermont, and start sharing, spreading the word, if you will.
You mentioned this bending the demographic curve. I'm curious to dig a little bit deeper into that and how you think about it, because the base rate is increasing. So I think the base rate of the United States is like 38 years old right now, but it's increasing rapidly. Vermont's something at like 43, and I think the youngest is Utah or Alaska or something at like 30. So are you measuring yourself against that moving median? Or if you stay at 43 for forever and the median catches up to you, like how do you kind of think about what's a win for bending that demographic curve?
I hadn't really thought of that. So I appreciate you asking the question. I think that the expectation is that we would bend that 43 downwards, because it's the trajectory of that 43. Mike Sherling, the Secretary of the Department of Commerce here in the state of Vermont, mentioned to me last year, not just to me, but expressed at a presentation, that within the next 3 years, the state of Vermont is likely to be upside down on its pension obligations. And that's a frightening number. I don't know what the national average is, but I don't think it's that short of a period of time. And so by bringing in younger people, we're not only just bending that number for the sake of bending it, we're starting to address the fiscal problem that the state and like most other rural markets is experiencing.
Well, Bob, this has been awesome. Kept you a little long here, so I appreciate you sticking with us. If people want to learn more about you or the work that you do at Vermont Works after the show, where should they go?
So Vermont Works, vermontworks.co is our website. And I invite you also to visit me on LinkedIn, Robert Zulkoski. In addition to lots of great information on Vermont Works, you'll see a number of the columns and articles that I've written that pertain to our mission and our strategy and our unique approach.
All right, Jay, we just spoke with Bob from Vermont Works. What'd you think?
I really liked the energy Bob brought to this interview, and not necessarily because it was super high energy, but because it was just a good, cozy Burlington, Vermont vibe that, between that and what he talked about with the state itself being a beautiful place to come spend time and the breweries and the pace of life there, it all sounds very welcoming and enjoyable. You've been there. Did it line up with your experience of Burlington or Vermont generally?
Yeah, afterwards, Bob was like, hey, you got to come out here. You got to just have some drinks overlooking Lake Champlain. And I was just thinking back to my experience there, riding a bike along Lake Champlain. It's such a chill, relaxed town. It's only 40,000 people or something like that, which is crazy because it's the capital of Vermont. But it is beautiful. The culture is kind. Yeah, I think that you hit the nail on the head there with the culture of Burlington.
It's very interesting to me to think about cities like this that have such a difficult time attracting young people. Wouldn't it be strange to spend time in a city where there weren't a bunch of other young people? It's such a catch-22 chicken and egg type of problem. I'm not sure how you solve it. They're trying a couple things between Hank, we're recording, come on. But a couple things between the $10,000 relocation grant and programs like Vermont Works that are trying to make it more attractive to entrepreneurs and specifically social entrepreneurs. So I don't know. I haven't spent a lot of time personally as a young professional thinking about places like Vermont as a potential place for me to live and grow a career.
Yeah, it's interesting because like Cleveland, where I'm from, has the same kind of brain drain problem, but the difference with Cleveland is there's so many people that are born there. And in Burlington, if you only have a population of 40,000, you're not having that many like aggregate offspring that could boomerang back. There is no, like, that conversion rate is going to, no matter how high it is still going to feel small.
It also seems like a lot of the population has transplanted there post-retirement, which is not when you're having children, which means it's kind of further continuing to that problem. But yeah, our thesis here is looking at cities outside of Silicon Valley as entrepreneurial hubs, and not every city is going to be that. What we're really learning is you have to celebrate the city for what it is and what it offers and what it can be for what type of person. And Burlington may never be a booming tech hub, but it can really carve out an attractive place for a particular type of individual who wants a certain lifestyle and wants to also be a business owner in, a geographic location like the Northeast.
I'll push back on that a bit. I think that there is nothing that says Burlington can't be their own kind of tech hub. We talked with the people in Madison, with Scott Resnick in Madison at Starting Block, and he talked about how Madison is this small little community, and it's bigger than Burlington, granted, but it's a small little community with its own competitive advantages. And look, it's never going to be the consumer-facing internet catalyst of the world, but they do specific things very well in Madison. And I think Burlington has a similar vibe, except for what they're focusing on is what kind of Burlington is becoming known for, and Vermont has been known for, is this sustainable, social impact, social good kind of vibe. So if you're starting a company like that, I mean, Unilever bought Ben & Jerry's, which is from Waterbury, I believe, and Seventh Generation, which is from Burlington. And I think that you're going to see a lot more purchases of companies that have this kind of social mission for the reasons Bob outlined and for the fear of missing out reasons as well by corporate execs. But I think that there is a niche there that they can own.
I don't think we're saying separate things. I mean, all businesses these days are tech enabled. What I'm saying is, you're probably not going to have high tech companies in mass the way you would have, he mentioned craft beer and spirits and farm to table and social entrepreneurship and sustainable companies. Totally. And those things will probably be tech enabled, but it would be really hard for that town of, I'm not sure what the population was. I think you said at one point 40,000.
Burlington's 40,000.
It'd be really hard for them to start swinging with even Pittsburgh. Like a lot of things have to happen and really accelerate. And is that even the priority for a place like Burlington, where a lot of people who are coming to live there may be coming to live there precisely for the reasons that make it less likely to be a high-tech hub? I'm saying, I think the same thing that you're saying, maybe with a little bit more of a bite, that all of these cities are more leaning into what makes them uniquely them and don't need to necessarily aspire to being a smaller version or second coming of Silicon Valley.
I would agree with that. And I don't think that's bad for investor returns either. I think that regardless of what your specification is, there are still going to be billion-dollar exits out of places like this.
Something else that came out of this conversation that I have zero experience with, but is really interesting conceptually, is this fact that Vermont as a state is close to being upside down on pension obligations.
That to me is every state in the United States.
And regardless, like that as a concept is such a scary, inaccessible thing that I've dedicated no mind space to. But it's similar to the conversation around public utilities and infrastructure. And some people saying, the future of all American cities is Detroit in some ways. I have no idea what the future of American cities 20 years from now, 30 years from now looks like from a municipality standpoint, with things like pensions that are owned or infrastructure that needs to be replaced. Yeah, anyway, that was just something that I haven't spent a lot of time talking about. Won't come up a lot on this podcast, but I like being exposed to ideas and problems like that.
It's very rare that on this podcast we talk about, besides maybe in like the Care Alert episode, aging populations and how they have direct impacts, because we're so focused on growth in the future and new and what's being built, which usually happens by people, and this is a generality, but between their 20s and 40s. So we're not usually thinking too much about the later years and what that can mean when you have a society that's essentially filled with people who are nearing their retirement years. A lot of people talk about how the emerging markets have so much potential because the average age in emerging markets is something like 23, whereas in America it's 37, 38 years old. So youth is definitely a growth factor, a potential growth factor, but youth also doesn't usually have capital. So Vermont has a unique advantage here in that they likely have a lot of older people who have some sort of retirement savings to invest back in the local ecosystem, whereas some younger cities might not have that.
And yet Bob's point to us about his $50 million fund is that 85 to 90% of it is coming from outside the state of Vermont. So I wonder if that is a necessity versus kind of the stated mission of Vermont Works of revitalizing the area and taking almost a centrifuge style approach of getting other areas outside of Vermont literally invested in the ecosystem of Vermont.
My guess is it's mostly Bob's network. Having been in private equity, he's probably very well connected to New York. New Yorkers like to go up to Vermont to vacation, and there is a natural, let's give some money over here. We know Bob, we trust Bob. He has 35 years in private equity. He knows what he's doing, but that's just my guess.
Well, I enjoyed getting outside of our typical circles here and learning about Vermont from Bob. I'm excited to check out the Vermont Innovation Commons when it's complete and we go on our Upside tour. Maybe on our Upside tour, we start hitting some of those 13 states you've missed, Eric.
We need to start talking to people from some of those 13 states.
You're right. Well, guys, we'd love to hear your thoughts on this one. If you have any thoughts for us or feedback, you can tweet at us as always at UpsideFM or email us hello@upside.fm, and we'll talk to you next week.
That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter at UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
Never mind, bro, that can't be matched. I'm lighting it on fire, used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep on rhyming, find a way and get it.